points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I hope you're having a wonderful day. Today, I want to talk about how I turned $60 into $600, 1,000% in one trade. Now, I usually use this opportunity to give a watch list. A lot happened in the market today. We are still going to talk about what to expect, but tomorrow is very straightforward, and best of all, we are going to be streaming it live, so hopefully we see you there. A lot is going to happen in the morning in any of these strategies. If you watch anything in any of these videos, you have any option trading questions, stock market, long-term, anything, and you want the fastest news in the world, then that is the place to be, baby. YouTube.com/thestockmarket. But we will get into the real quick recap of the day, but I do want to highlight now this trade that we made on Affirm, and as you can see here, I am still up 1,000% on it. You know, this wasn't just a pop and drop type of play. It got to go up and it held up. Now, I only put in $50. You could say it was lucky, you could say a lot, but we have hit a lot of these trades, and you could pretty much go see it on the channel or live. But what I do have for you is just a set of 5 different tips so that you could learn how to find these yourself. There is actually a pretty decent criteria when it comes down to this, or if you want to maximize your opportunity to get options that have the ability to go up 1,000%. A lot of new traders don't realize this, even if you're kind of more seasoned. Some companies and some type of contracts, they really have the ability to go crazy, whereas some, really, you're never going to see 1,000% on them unless the underlying stock goes crazy. So I thought this would be a good video coming into Friday. Let me know what you guys think. If you have any questions or comments, post them below, and hopefully we see you there in the morning. But right off the bat, I'm going to get straight into it. If you want the update for tomorrow, I'm going to put that there towards the end of the video, and I'm even going to talk about the trades that I made today because I have an example. We hit a nice 100% trade today, and it does kind of meet the criteria. You'll see what I'm talking about. Now, coming into finding these 1,000% options, I'm going to start with the first tip. You may like this, you may not, but it is get a long-term investment account. Option trading is cool. You could do a lot, and it could be very great, but if you want to avoid a mountain of regret, especially as you are trying new strategies and kind of looking for these higher return, higher risk plays, this is how you are going to make sure everything is good. So this is our small account that we made for YouTube, and then we also made a big one. You combine them together, you could see, and recently, if you want to participate, I just made one for my sister. So if you guys want to see how we build up one of these small accounts from scratch, again, that's what we did with both of these. These all started at $500. We add to it monthly, but overall, even throughout the worst crash, the meme stocks, up and down, volatility, we are still up 50% net profit on the whole entire investment. So little by little, you could go a long way by simply owning equity, and that's really the first thing you're going to want to do when it comes to getting options. Now, as far as the actual options, this is something that is just easy to remember, but a lot of people overlook it. If a company has a small float, that will equate to big moves. If you don't know what a float is, it is the amount of shares that are publicly traded. Now, if you come to TD Ameritrade, if you come to the fundamental tab right here, you go to analyze. I don't know if you can see it above there, but it goes monitor, trade, then analyze. Click analyze, go to fundamentals, and then enter in the ticker right here, AFRM. That's the play that we did it on. And then if you come here to the bottom, you guys can't see it because of the banner, so let's make it smaller. Right here at the bottom, it will say total shares outstanding, 265 million. If you are on E-Trade, you come here to a quick quote. I don't know if you guys know how to do this. You could really right-click on any chart or any symbol, and then send symbol to quick quote right here, and then it will bring this up, and then you could even click fundamentals, and then it should be able to say the amount of shares that are on there. Shares right here. This is for AT&T. Remember that says 7 billion. So most places that you go to, either Thinkorswim or anything like that, they are going to be showing you the amount of shares outstanding. That means all of the shares that are held by anybody insiders and outsiders. The float is the ones that are available on the public market. So sometimes you do have to make an assessment as far as what is going on with that trade. You could even check FinViz or other resources, but usually float is going to be maximum the amount of the shares outstanding or less. It could never be more. So this is kind of like the outer bound limit, but understanding this gives you a good idea. So now I got a couple companies that you could look at to just get a general idea here. If you come to Apple, you'll see here on the shares, that's 1 billion. If we go back to here with Affirm, the play that we made, you'll see 265 million. If you go to Berkshire Hathaway, that is going to be 623,000. So this is a really good point to note. We're going to talk about this because the price of the stock really does reflect the amount of shares. But if you start going through companies, usually anything below about 500 million is a small float, and anything 200 or less, that's even smaller. And really anything below like 50 million shares, that is usually a really small float, and chances are that stock will move big. And this is the whole point of this video here. Those are going to be the options that have the ability to really surprise, and then at some points, if you go through the criteria, you will be able to find them for cheaper. So it is very simple, but a lot of people overlook it. A small float equals big moves. The companies with small floats, they're usually going to be able to move big and have options that have big gains. So like I showed you with AT&T earlier, that's a 7 billion share float. And if you look at the options on the option chain, they don't really price in a lot. So if you come over here, you could take a look. Some of these out of the money for October, they're really cheap here for a reason. And then notice the difference between the strike prices. It's only $1. But even if you look at the overall chain, they're really cheap options. And why? Because the float is 7 billion. 7 billion shares is a lot. And why the amount of shares is so important? Because if there's a lot of shares that are available to be traded, that means a lot of shares and money has to come in to move the price. Whereas if there's only a few shares or a limited amount, it's easier to have people holding, and then the price gets driven up. So that's why sometimes too, by even looking at the option chain, this is going to be the next big factor we want to look at. That could give you hints as far as what kind of stock is this? Does it have the ability to move like that? So keep that in mind. But finally, on this point here, the smaller the dollar moves on the stock, if you look at it on pretty much a weekly or monthly average, it is less likely to move big. So what I'm saying here, come back to the 100-day chart on AT&T. From bottom to top, this range is just about like $3 or $4. So that is pretty small. If it's only moved $3 in the last 3 months, that means it is not really a big mover. Whereas you compare that to like Shopify, again, 124 million flow. If you look at the bottom, $1,000 to $1,500 at the top, even higher, that's about 50%. Now, granted, there is some exceptions like Apple. They have a 16 billion. Did I say 16 billion? Yeah, 16 billion share flow, but top to bottom, 120 to 150, but that is still $30. That's going to be different than Facebook, which decently sized flow at 2 billion, but 300 to 370, you could get an idea of what sort of dollar moves this is going to make. That's why when you go to the option chain, you're able to decide, okay, can I get a cheap option that moves big? So if you come and think about it, let's go to the play that we actually made. This is the one the video is about. You could see the Affirm. I grabbed a 125 call, and we bought it on August 24th for $50. And it expires in November. So coming to the chart, you'll see August 24th is right about here. The stock was trading at $69, and I pretty much said, yes, I want the right to buy the stock at $125 a share. Couple days later, it's moved up to 90. Sure, we may have been getting lucky in that sense that it happened so quickly, but there was a better chance that Affirm had this ability to move than not. Again, look at the 30-day range. Besides that, you're at 49 all the way up to 80. That's almost $100. And then really pull the chart out, you could see the range goes down to like 30 all the way up to 140, and this is just from the beginning of the year. This stock has the ability to move a lot, so that's why some of these options, when I got them, they were really, really cheap, and even that 125 at one point, this same option was going for about $5,000. It just went in the gutter as the stock dropped, time decay, and all of that. It may have been unlikely at the time, but this is the point I'm trying to make here. It doesn't mean that this stock is unlikely to move 30, 40, 50, 100%. Whereas if you compare that to a big float company like GM or something like that, or GE, it's probably only going to be able to move a couple dollars. So that is just a big part of this whole equation. Again, you will be able to use skill and news and all of that. We'll talk about it, but at the end of the day, if you're going to spend a small amount of money and getting an out of the money play, you want to make sure it is on a small float stock that actually has the ability to move. So coming into the next tip here, this is for the option chain, but the larger the difference between the strike prices, the difference, the more likely the stock is going to move big. So like I showed you on the AT&T, if the strike prices are separated and they're smaller movements, it's probably a slow moving stock. So coming to the option chain here, you could take a look from when the stock was at the money or not. This is $5 increments, and at one point it'll even jump to 10, and usually the further out the money you get, it'll go to $10 increments. But pay attention, 100 to 105, 105 to 110, that is a lot different than AT&T, which the stock is a slow mover, big float, 27, 28, 29, 30, and even some stocks like even Ford, you could see right here, it's going to probably even have 50-cent differences as you even get closer on the chain. So 12, 12.50, 300, that is because this is a big float. It is not a big mover, 3 billion shares. So this is just a little trick that's often overlooked. Again, even if you're trying to, let's say, respond to news comes out, you may not be familiar with the company, pay attention to that option chain, because if the strike prices all of a sudden are small and then they get big, when they start getting really, really wide, that means you're probably just way, way too far out the money. And then vice versa, though, if you start to notice just right off the bat, all the contracts have $5 differences, chances are those contracts may be a little more expensive, or the stock has a low float and really has the ability to gas and move big. Another factor you could even look at when you get to the option chain is also the difference in the spread between the options. So again, on a lot of plays, if it's really a slow mover, you'll notice a 1 cent bid and ask difference. That's because there's probably a lot of volume and a lot of activity on it. It is a big supply of shares. It doesn't move big. Usually the bigger movers will have a large spread, but this one isn't as reliable, because what happens, even if Ford got really big news and started to move big, the spreads would widen. But that's how you could use the option chain to communicate with you a little bit, because if you start seeing the spreads get really, really wide, either they're naturally wide, and that could indicate a small float, big mover type of play, or it could indicate just a really, really big lack of activity on the stock. But if you do see a big spread, it could usually indicate that there is volatility. Pretty much when those spreads widen and there's a big difference between the highest bid and the highest offer, that's telling you there's uncertainty and that the market doesn't really know. And if there's a wide range on the option, chances are there's a wide range on the stock as well. So coming into the next tip here, especially like we even did with Affirm, if you want to find some of the plays where it's like, okay, how can I get a big move? Okay, I verify that the stock can move big. What you want to look for is stocks that have had news, but the hype has died down. You could definitely make a play by getting to the news and getting to it fast and quickly. You've seen that on the channel, but the early bird gets the worm, but the second mouse gets the cheese. And actually, that is what has happened with Affirm. So if you guys remember how Affirm even played out, when we first got it, prior to it, I did play the shares about 3 weeks beforehand. I even made a quick flip, but why did Affirm kind of get its first pop and go crazy? This was after Afterpay got sold for a couple $1 billion. People got hyped on the industry. There was news for a bit, then it kind of faded out over the next 2 weeks, and then there was the deal announced with Amazon and Affirm, and that's what sent the stock up. However, you could apply it to this, and we have seen it many, many times on various different companies and levels, where the first set of news or industry-related news comes out, the market is able to react, and then about anywhere from a couple days to a couple months go by, the same news is still in place, and the stock doesn't really move but holds a range, and then all of a sudden, the news gets announced. This is probably one of the best ways to find big moving stocks, because you have a reason, you have a catalyst. This could help you get a little bit more conviction in a trade. However, However, you got to be careful kind of chasing some of these, but that is exactly what happened here with this case in Affirm. So keep that in mind, because if you ever see news come out and you miss it, doesn't mean your opportunity is over. And this is really how you could become a trained sniper and wait for it. And then you could really find the options. Like I'm saying, those Affirms, they were really, really expensive at one point, and then they got cheap. You could have pretty much waited it out and seen what was going to happen, because at one point, after that first pop, the same calls that we bought, they were going for $1.27, almost 3 times what we were able to pay for it. So you saw that was the first hype, died down a little bit, and then everything else that happened pretty much with theta and the options, it did its work, but this time in our favor. So definitely keep that in mind. Oh, I forgot to show you guys the chart. That's where it was right here. So there's the option. You can see how it played out. But I was showing this right here where, again, this was the first pop after that Affirm news, and then you could see the stock kind of chilled out, and then it pretty much did its thing, and then we were able to take advantage of it. But now, coming into the next play here, an easy way to find some of the companies that could move big is find a company that has had a big move on earnings or is kind of in a hype phase. I would be more hesitant towards hype, but if you see a company that is moved very, very big on earnings, chances are you kind of got to see the bloodline of it, and you kind of know what it could do. So a good example, you guys have seen me hit this. I believe this was a 3,000% play that we made, but SAP, and we even played a couple of other ones like VMware. But take a look. Here's the 1-year chart. What do you notice? A big drop on the options. Come out to the 2-year chart, and what do you notice? One big pop-up, another big gap down, then you got a little bit of COVID, and then you get to see it. But we could come up to a lot of companies here. Another good example is ANET. We've hit this play, believe it or not. We hit a play that went from $30 into $3,000, and it was playing this stock. But look at this chart here. You could see big gap, big gap, big gap. It has the ability, even coming from it on the upside. Another one is like stamps.com. They eventually got a buyout, but look at gap, big gap up, big continuation, but you could literally see it come to life. So there's many reasons for this. This highlights the ability of the stock to move, the shares and all that. But now, even fundamentally, usually after earnings, that means people are reacting, the value's changing. It's either going to keep coming down or it'll eventually get back to that value. So you kind of have a little bit of a catalyst there. So definitely keep that in mind. The companies that move big on earnings, those could show you a lot, or if they've gone through that phase. And again, I like the earnings moves as a more solid candidate than just a stock that shot up 2,000% and then came down and then kind of never really did that. Again, look at the history and to get a better idea of that. Now, coming into the final tip here, just go small. It's best to go bigger on the trades that are like tied to a logic. Like I probably should have went a little bit bigger on that Affirm. Again, the company had the ability to move. It's moved big off of earnings and IPO. It had news and it got hyped down. The contracts were really, really far apart, and there was a lot of volatility, and those contracts were going for a lot, and I already have a long term. I could have probably justified it. However, you never know what is going to happen with these. These plays are nice to hit, and if you're able to get a couple and then hone in and not waste your money on the ones that lose, it could really actually pad the stats and get you some good gains there. But otherwise, by going small and getting small exposure, this is the best way to get these opportunities where you're not trying to make a quick flip for a couple hundred, but then could lose 20, 30%. At the end of the day, I got to make $600 on this trade, but I only have to spend $55. So we could go through the list of plays that we spent sub 100 that have netted $500 to even $5,000. They could do a lot of work for you, and you would be surprised what it could be. However, keep in mind the probability is a lot lower. So definitely keep it small. And then finally, the ghetto spread will actually keep you from selling too early. You have 2 options. You could either buy 2 of them for cheap, it shoots up, you make 1 free, you sell, get your initial investment, book some profits, or you do the ghetto spread. Now we have a video on it, but essentially you can see it right here on Robinhood. What the ghetto spread is that when you invented by the code 2019, but when you buy an option and you own it, you can see here, we own this 125. It is now worth $635. However, we only paid $55. So what you could do with the ghetto spread, you come to the chain, instead of buy, you want to hit sell and then go to an option if it's a call that's higher, one that's worth less now, but a further strike price. In this case, I could do the 125 or the 145. We'll do the 145 for numbers sake, but I sell this one. I already own this one. and this turns it into a debit spread where I could literally get right now, I spent $50 for the 125, but I could go and sell the 145 for 365, and essentially I'm agreeing to sell my shares at 145, but the only way I would do that is if they get to 125. And then since I have them at 125, I could make a $2,000 difference until it gets to 145. So it usually sounds confusing at first. Watch the video or come on stream. We'll love to explain it to you. But by doing this, it would allow you now to profit off some of these trades, still have a little bit of upside, and not really worry too much on timing or top ticking it. But these 5 things, if you actually consciously think about them and you don't end up finding options that move big, I would be surprised. But this right there, it just gives you a framework and criteria to kind of narrow down and focus on. So I really hope it helps, and I hope I see you on stream. Now, I do have a play that I want to go over today. We made a 100%er today. We will cover it, and you could even see how it falls in line with everything. I mean, we used kind of a similar strategy as well as our earnings or post-earnings morning play, but I got this ace on. We bought it in the morning for 60 cents. I got this sell one here for 120. That's what we mean by making it free. I didn't do the ghetto spread. Instead, I spent 120 for 2 contracts. Then one contract went to 120. I sell that back, get my initial investment, and now I have a free contract all the way till October. But that was one of the plays I made today. But as far as what we are expecting tomorrow, remember, this is what we do every day on the watch list. So if you're new, welcome. But I'm sorry I had to push this out for my OGs. I love you. I know y'all will watch it through. I know you ready, and I hope you got to learn from it a little bit. But tomorrow is going to be all about the jobs report. This is why I thought I could do this video, because we know what we're looking for. The real question is going to be now what the market's first thought is going to be. If it's good numbers or bad, we've talked about those expectations, but now we're going to kind of stretch them out a little bit, because it seems like most analysts and economists are split now, but they are expecting it tapering to be announced in November, not September. So it gives us some flexibility with this report. However, depending on what the report says, that may change things. Now, after we get this report, and why it could have such an impact is because people are now just going to be factoring in the Fed and the meeting that we're going to be getting here in September, because the Fed will be releasing the projections for the Fed funds rate out into 2023, and I believe even a little bit further. So that type of guidance from the Fed, it's always going to be data dependent. That could say a lot, and people want to see if it switches anything. So a lot of people are going to be watching that number close. The jobs report is going to be coming out an hour before the market bell, so we will get it pre-market. We will be able to digest it. Really, I'm expecting a big move in that first hour and a half, and then I think it'll kind of chill out maybe towards European close, get a little bit more of a move, and then we will see how we come into the Labor Day holiday. Now, as far as your pretty picture here, what we got is the dollar hitting its first 2-week low or back-to-back week low since April. And if you look at April, think about what we came off of with March. April was a very, very good month. So the fact that the dollar went down, and that even indicator I gave you guys yesterday with trade balance, that kind of balanced out a little bit. So that was good. But if the market is able to digest everything positively and we see the dollar keep going down, that's probably going to be our indicator that the market may like it, and we won't get a reaction tomorrow as much as we will when we get the Fed in September or middle of September. But that is pretty much it. I'm going to save some of the news and events for the morning tomorrow, so hopefully I see you on stream. There was a couple of things that happened, and it relates to the play. And the other play that I made today, I grabbed Facebook October 315 puts, spent $1.08. I got 2 of them, and this was just playing some of the antitrust stuff. So those went up a little bit. Gonna be watching that. And then another piece of news had to do with space, and I'm surprised that these contracts actually held up, because I thought I paid a lot for them. But the FAA announced a probe into the space flight that occurred in July and said space cannot launch anything until the probe is complete. So I grabbed September 17th, $19 puts for 19 cents. Spent a pretty decent amount, 190. So we will see how that one plays out, but I'm expecting that to move. And then I sold one of those NVIDIAs, or the final one. Wanted to trim some of the profits here as we get into the report and kind of where the market is, but we did keep some exposure. And then I flipped that ASON in the morning. And if you go and look at ASON to meet this criteria, one, I'm playing the news. I played the news that we got in the morning with their earnings. They were up 11%. It sold off in the morning. I got it within the first 3 minutes right here, and that's how we were able to get it for $60. It had a decent amount of time Problem was it was far out the chain, but take notice, $2.50 increments. So I was a little worried about this because I got the ones when it started moving in $5 increments. That's when it gets crazy. So ASON has the ability to move, but not too crazy, but it's not too weak. And then the float is 91 million. So contrary to that, though, the $2.50 increases, I think this thing could move a lot more. But I grabbed these at $60. We just waited till it kind of hit that bottom. We reacted to it again. The stock was up 11%. Then it dropped to 2%. I bought the play for the continuation. We knew the catalyst, and then it carried on from there. So I'm still holding that play, and then I'm still holding the Affirms. We got a little bit of exposure, and I'm pretty much going to be watching out after the jobs report and everything else. Are we going to get a rush to defensive stocks, and are we going to get that value rotation? But other than that, all we got to do is watch TLT and the dollar. Again, a very interesting day for the dollar. TLT is still chilling out. We will find out what happens when the dollar really comes down here. If it really breaks from here, this could start to get bullish because pay attention, market's still up, bonds are still up, dollar's the only one moving. So get ready for a game of chicken or one of them to dance. But overall, it is clear that the market is going to wait for the data. If tomorrow is not confusing enough, then clearly FOMC will definitely be the nail in the coffin. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember life's like a bag of Legos, baby. Your game, or you're on your second bag. Kill it. But Dico loves you. I love you. I will see you in the morning. Let's go.